Dear finance professionals and students, welcome to podcast of FCA Deepak Rao, a practicing chartered accountant. Weekly digest for week 2 of January 2025. India's electric car industry is on the verge of a transformation, with the spotlight shifting to EVs that can go the extra mile. Literally, as consumers increasingly demand vehicles capable of covering hundreds of kilometers on a single charge at prices comparable to petrol and diesel models, manufacturers are racing to deliver. Almost 75% of electric passenger vehicle buyers in 2024 opted for vehicles with 300 to 500 kilometer range, and another over 10% went for higher range EVs. Leading car makers such as Mahindra & Mahindra, Tata Motors, Maruti Suzuki, MG Motor and Hyundai are expected to roll out at least 10 new EVs offering ranges of 500 to 680 kilometers per charge in the first half of 2025. SEBI has introduced the Mutual Fund Light framework for passively managed mutual fund schemes to ease entry, reduce compliance costs and foster innovation. The Mutual Fund Light framework applies to passive schemes such as gold ETFs, silver ETFs and fund of funds investing solely in gold or silver ETFs. It also covers overseas ETFs and fund of funds based on a single underlying overseas passive fund, as well as passive funds tracking domestic equity indices with a collective AUM of INR 5,000 crore or more. SEBI has decided to introduce integrated filing for governance and financial periodic filings required under the LODR. The integrated filing shall be applicable for the filings to be done for the quarter ending 31st December 2024 and thereafter. As per the updated filing framework, governance filing shall be done within 30 days from the quarter end, whereas the financial filing shall be done within 45 days from the quarter end, except last quarter. Ministry of Corporate Affairs has notified amendment in Rule 12(1)(b) of the Companies Accounts Rules 2014. As per the amended norms, the deadline for filing Form CSR2 for financial year 23-24 is extended from 31st December 2024 to 31st March 2025. Earlier, the SEBI issued Cybersecurity and Cyber Resilience Framework for the regulated entities. To address the concerns of the regulated entities, SEBI has issued a clarificatory circular. SEBI clarifies that the date of implementation of the circular on the KYC registration agencies is extended from Jan 1st, 2025 to April 1st, 2025. Further, depository participants' compliance timeline is extended from Jan 1st, 2025 to April 1st, 2025. Ministry of Home Affairs has clarified that if a consolidated income tax refund, including TDS for foreign contributions, is received in a non-FCRA bank account, the foreign currency portion should be transferred to the FCRA account. This transfer will not violate the Foreign Contribution Regulation Act 2010. TDS deductions should be treated as foreign currency utilization, and any refund in the FCRA account will be reported as other income in the FC4 form, simplifying compliance for associations. The Indian arms of Deloitte, PwC, EY and KPMG showed strong revenue growth in financial year 24, driven by consulting and tech services, with combined revenue reaching nearly Rs 38,800 crore and are expected to surpass Rs 45,000 crore by financial year 25. This growth has been fueled by high demand from mid-market clients and government services despite slower growth due to economic uncertainties. Adani Group has partnered with Thailand's Indorama Resources to foray into refinery, petrochemical and chemical business. Adani Enterprises Limited or AEL, a subsidiary of Adani Petrochemicals Limited and Indorama, have formed a joint venture with equal shareholding. AEL, the flagship company of the group, has been an incubator for different businesses. It currently houses businesses including airports, data center, defense and aerospace, solar manufacturing under it. Sachin Bansal is negotiating with investors to sell his $100 million stake in Ola, valuing the company at around $4 billion. Bansal aims to liquidate his holdings in Ola to focus on his fintech venture, Navi. Navi has faced some regulatory hurdles while seeking external capital. Bansal's move comes right after his exit from one of his earlier bets, IPO-bound Ather Energy, where he sold the stake to Zerodha's Nikhil Kamath. The Institute of Chartered Accountants of India or ICAI is gearing up to finalize its international networking guidelines for Indian chartered accountant firms by the end of this fiscal year. The move is part of ICAI's broader mission to enable Indian CA firms to compete on a global scale. Currently, Indian CA firms lack specific guidelines for international networking. Recognizing this gap, ICAI is developing a robust framework aimed at fostering global partnerships and enhancing the global standing of domestic firms. The initiative is expected to position Indian CA firms as leaders in the global accounting and auditing industry. In the shadows of a sliding rupee, India's knitwear hub Tirupur is weaving a success story. While the domestic currency edges closer to the 86 mark against the US dollar, triggering concerns for many sectors, this textile town in Tamil Nadu is finding opportunity in adversity. Between April and December alone, Tirupur's exports reached Rs 26,000 crore, almost eclipsing last financial year's total of Rs 30,690 crore. The Institute of Chartered Accountants of India has rooted for a special and concessional tax regime for partnership firms as part of its suggestions for the Comprehensive Review of the Income Tax Act 1961 announced in July 2024 budget. At present, partnership firms, including limited liability partnerships, are subject to a 30% income tax. A 12% surcharge is also levied if the taxable income exceeds Rs 1 crore. To reduce compliance burden, the ICAI has pitched for the introduction of year-wise e-ledger system for crediting TCS and TDS and advance tax payments, which can be adjusted against the income tax dues, and extension of the time limit for filing belated return by 3 months to March 31st of the assessment year, among others. The central government exempts income tax deduction under Chapter 17 of the Income Tax Act on payments received by the National Credit Guarantee Trustee Company Limited, which is established and wholly funded by the central government for managing credit guarantee funds, also established and fully financed by the central government, as specified in Section 10, 46B, Subclause 1. As per the new CBDT notification, the exemption also extends to payments received by a credit guarantee fund established and fully funded by the central government, which is managed by the National Credit Guarantee Trustee Company as specified in Section 10, 46B, Subclause 1. The Central Board of Direct Taxes has issued a notification specifying that no tax deduction at source under Section 194Q will be required for purchases made from units of international financial services centers, provided both buyers and sellers meet specific conditions. Section 194Q provides that every buyer responsible for payment to a resident seller must deduct tax at source at the rate of 0.1% if the aggregate value of goods exceeds rupees 50 lakhs. The Income Tax Department has released the latest Excel-based utility version 1.8 for filing income tax returns ITR2 and ITR3, ensuring a smoother and more efficient e-filing process for taxpayers. The updated utility, launched on January 4, 2025, brings enhancements aimed at simplifying the tax filing process for individuals and Hindu undivided families. The Foreigners Division of the Union Ministry of Home Affairs has introduced new regulations requiring chartered accountants to include specific declarations regarding compliance with the Foreign Contribution Regulation Act 2010 when filing audit returns for NGOs. This move aims to enhance transparency and accountability in the utilization of foreign contributions. Direct-to-consumer brands and quick commerce platforms are experiencing surging demand for health and fitness-focused products in the new year, propelled by a growing focus on fitness and personal well-being by consumers. Tier 2 and Tier 3 cities are increasingly contributing to the demand surge, a trend that contrasts with previous years. The overall surge in fitness and wellness demand signals a growing commitment among consumers to prioritize their health. Companies believe this trend, coupled with the growing accessibility of digital platforms, quick commerce services, and technological products, indicates a sustained shift towards healthier lifestyle across both urban centers and smaller cities. Indian entrepreneurs, CEOs, and investors anticipate a resurgence in private funding and heightened public market activity for new age startups in 2025. Nearly 60% of 60 leading founders, venture capitalists, and internet executives covered in a survey expect an uptick in private financing, while over 70% foresee a surge in tech IPOs next year. The overall positive outlook, fueled by a robust capital markets for Indian tech companies, comes after 2 successive years of a subdued outlook after 2021 funding euphoria. Reliance Jio is scaling up its 5G-based fixed wireless access business, Jio AirFiber. Jio aims to add 1 million AirFiber customers within 30 days. The higher average revenue per user, or ARPU, from 5G-based services is expected to accelerate 5G monetization and attract investors for a potential IPO by late 2025. Jio Platforms is valued at $98 billion. Naira Energy-backed Rosneft plans to invest Rs 68,000 crore to set up a 1.5 metric ton per annum ethane cracker at its refinery in Vadinar, Gujarat. This major overseas investment aims to enhance India's petrochemical sector, which is projected to grow significantly. The company has initiated front-end engineering work for the project. As much as half of the mobile phone manufacturing capacities created since the government launched its local manufacturing push through the Production-Linked Incentive or PLI scheme are now unutilized or being used to make other products due to weak demand globally and domestically. Utilization rates are higher for manufacturers which are exporting in large numbers and are part of the PLI scheme, while smaller players producing mainly for the domestic market are repurposing a major proportion of their assembly lines to make products like telecom equipment and wearables. Underutilization has been high since 2022, when the post-COVID pent-up demand started disappearing. The online gaming industry in India is under immense pressure as companies face tax demands that exceed their total revenue. At least 2 gaming companies have filed applications in the Supreme Court seeking interim relief against the GST department's move to impose a 28% tax on the entire betting pool for past years. The Goods and Services Tax Department has begun issuing adjudication notices to finalize its claims ahead of the February 5, 2024 deadline. If the notices are not converted into adjudication orders by this date, they will become invalid under GST regulations. However, gaming companies fear that hastily executed tax demands could lead to the collapse of several businesses in the sector. India will witness more demand for steel in comparison to other major steel-consuming economies in the calendar year 2025, with a growth of 8 to 9%. The growth will be driven by a shift towards steel-intensive construction in the housing and infrastructure sectors, along with better demand for engineering, packaging, and other segments. Unlisted companies are outpacing their listed counterparts with faster revenue and earnings growth. According to data from the Center for Monitoring Indian Economy, unlisted firms recorded sales growth of 8.34% in the financial year 2023-24 compared to just 1.69% for listed companies. The findings are based on a sample of 4,231 unlisted companies compared with 3,575 listed non-financial companies. Employers in India are planning to outpace global adoption in certain future technologies as companies operating in the country are heavily investing in technologies like artificial intelligence, energy technologies, robotics, and autonomous systems, said the World Economic Forum in its latest Future of Jobs report. At present, the microfinance sector is reeling under severe asset quality stress. The sectoral gross non-performing assets ratio rose to an 18-month high of 11.6% at the end of September. About 5 million micro borrowers, or nearly 6% of the total base as of November, took loans from 4 or more lenders, illustrating the extent of the indebtedness that has triggered defaults and caused a ballooning of bad loans in the lending industry, serving the most vulnerable customer segment. The number of borrowers taking loans from 3 or more lenders was 11 million, or 13% of the total microfinance borrower base of 85 million, as per a report from a credit bureau. The SEBI has revised norms for settling funds of clients inactive for over 30 days. Previously, trading members were required to settle such accounts within 3 working days, causing daily procedural inefficiencies. Based on recommendations, the SEBI has now mandated that these funds be settled on the upcoming settlement dates of the monthly running account settlement cycle as notified by the stock exchange. The RBI has issued the Master Direction Reserve Bank of India Credit Information Reporting Directions 2025, consolidating existing guidelines for regulated entities on credit information reporting. These directions have been issued under Section 11 of the Credit Information Companies Regulation Act 2005. The Reserve Bank of India has initiated a significant update to the financial reporting formats for cooperative banks under Section 29, read with Section 56 of the Banking Regulation Act 1949. Cooperative banks are mandated to prepare a balance sheet and profit and loss account as on the last working day of the year, using the forms specified in the third schedule of the Act. These forms, originally notified in 1981, are now being revised to align with the evolving financial landscape and modern accounting standards. The Indian government is considering incentives for battery component manufacturing to support the electric vehicle industry. The Ministry of Heavy Industries is identifying components that need financial support. This plan aims to reduce import dependence and strengthen the local ecosystem for electric mobility and battery storage. Discussions and decisions on specifics are ongoing. Chinese companies are approaching the government seeking clearance for their executives or appointing locals on their boards, since Chinese nationals are unable to receive visas or the director identification number. The local unit of electronic component and electric vehicle manufacturer BYD has sought security clearance from the Ministry of Home Affairs to enable 2 Chinese executives on its board to get Indian visas. Only after obtaining the visa can BYD abide by the Companies Act that mandates one of the directors of a company to reside in India for at least 182 days a year. Multinationals in India which follow the January to December performance cycle are issuing flat to slightly lower salary increments for 2025 as companies grapple with global economic uncertainties. Those running global capability centers in the country are paying out the highest increments, though it will still be marginally lower than last year. Pay increase projections are lower compared to financial year 24, and this is largely because businesses aren't doing well across most sectors. The pattern is true across industries including automotive, energy, construction materials, and engineering. In this peer set, the projected pay increase is about 8.8 to 9.2%. The Reserve Bank of India significantly increased enforcement of penalties on banks in financial year 24, with public sector banks paying 6 times more and private banks paying double the previous year. Enhanced vigilance since the near collapse of Yes Bank has led to heightened surveillance and stricter regulatory actions, including bans on significant lenders. The deadline for GSTR1 and GSTR3B both has been extended by 2 days each. GSTR1 deadline is now January 13th, 2025, while GSTR3B deadline is January 22nd, 2025. However, for quarterly GSTR3B filers, the deadline has been extended to January 24th and 26th, 2025, depending on the state. The Reserve Bank of India has issued the Master Direction on Non-Resident Investment in Debt Instruments 2025, Consolidating Foreign Exchange Management Regulations 2000, Foreign Exchange Management Borrowings and Lending Regulations 2018, Foreign Exchange Management Debt Instruments Regulation 2019, and directions. The Securities and Exchange Board of India may soon ease the registration process for foreign portfolio investors planning to invest only in Indian government bonds or government securities. The changes will be announced soon, will reduce the need to furnish certain data that was earlier required in the usual FPI registration process. The Securities and Exchange Board of India has proposed increasing the investment threshold set for granular disclosures by foreign portfolio investors or FPIs from Rs 25,000 crore to Rs 50,000 crore. The proposal to increase the threshold is on account of a rise in daily market turnover. Under the August circular or the additional disclosure framework by SEBI, FPIs holding more than 50% of their Indian equity AUM in a single Indian corporate group or holding more than rupees 25,000 crore of the equity AUM in the Indian markets are mandated to give disclosures of ownership. Foreign equity investments from Singapore, the United States, and Canada are significantly increasing in the Indian real estate market. These three countries collectively account for more than 25% of total equity investments. The sector is also seeing notable investment growth from the UAE. Despite foreign interest, domestic investments remain dominant, comprising nearly 70% of the total equity inflows in 2024. Vari Energies Limited, India's top solar PV module manufacturer, has agreed to purchase NL Green Power India for Rs 792 crores. This acquisition adds about 640 MW of renewable energy capacity and a 2.5 gigawatt project pipeline, enhancing Vari's position in the renewable energy sector. This podcast is sponsored by Sound of CA. We share because we care. Vande Mataram, Jai Hind.